All right, here we go again. Welcome to the Patterns and Profits podcast. I am your host, Tom Gentile. And wow, it is the first official day of summer. Well, yesterday was. I, I'm popping in and out of the state of Florida. It's crazy. I feel like I'm a frequent flyer again. Hey, summer's officially here, folks. And man, markets have been churning. We're out of earnings for the most part. I think we're going to hit the summer doldrums for the next few weeks because earnings don't start again until we got to get to the end of June. Then we got to get through the first couple of weeks of July before we start hearing about anything. So we probably got a month where we're going to just move sideways, move up, move down. Who knows? Summer is typically a slightly up market. Think about an airplane that takes off. It doesn't go straight up. It banks. It moves. It turns around before it gets its clearance to take off and head in the direction it's supposed to go into. And so I think that's what's going on with the stock market right now. Hey, happy belated Juneteenth to everybody out there. I was thinking about this week as I was taking the day off. And I thought, how many other people get to take off a national holiday? And I started thinking about it. It seems like these holidays, if you really are going to take the day off, you either got to be a government worker or you got to be somebody like me that works in the financial markets. And if the markets are closed, oh, well, you're off too. Because I think about it, when I worked and I got to go back a ways on this one, Pizza Hut. Yeah, I worked for Pizza Hut, Home Depot. Holidays to me, and I go back at Home Depot because I loved working holidays because they paid time and a half. They paid double time for people to work on holidays. And so the only days that we were truly off that I remember were we took Christmas and New Year's. And I think that was it. I think every other holiday I was working or I was trying to work. Sometimes I got the day off. It was a roll of the dice. And if you're in retail, you know what I'm talking about. But most of the time I didn't. And most of the time I didn't care. I wanted to work because I was being paid more to work. To do the same thing I always did, I got paid more. Probably the first lesson I learned as a teenager when it came to being paid what you're worth. You got paid a time and a half what you were worth. And in holidays, you got paid double time what you were worth. And if you hit the trifecta correctly, you got paid double time and a half. And man, those companies hated that. But we would actually time it. I mean, I would look at the schedule and I would either schedule myself or I'd have my boss schedule me to where by the time that holiday came up, I was already in the overtime. And, honestly, he didn't know it. He only found out after the fact when his manager said, "What are you doing working these people, getting them to get paid double time and a half? Are you an idiot?" So, yeah, that was probably my first pattern, one of the first patterns I ever used to my advantage. But I've added to let you know, I added Juneteenth into the holiday pattern finder because we look at several different holidays, as part of. We look prior to the holiday, we look after the holiday to see if there's a way that we can find a pattern. And a lot of times we find bullish patterns that happen in the holiday season. All right. Let me explain what I'm talking about here. About July 4th for a moment. Okay. Here's a holiday. And it is a holiday that, like I said, a lot of people take advantage of. Some can't because they got to work. But I want you to think about this as a pattern for a moment. So, did you know that on average, 90% of the time over the last 10 years, the week prior and the week after the 4th of July have averaged somewhere around 2.5% returns on the S&P 500 or SPY. Okay. So I went back and looked at this 10 years back to see if there was a pattern. Okay. And there is. There's a pattern to where if you look 10 years back, you can find this pattern exists. How about 20 years back? Let me go 20 years back. 20 years back, that takes us through COVID. That takes us back through the financial crisis of 2008 when the markets were going down. Still, the week prior and the week and a half after Independence Day, 4th of July, 80% chance that you had a market that moved higher and winners, losers, etc., just south of 2%. Just south of 2%. There you go. That's a pattern, folks. Okay? That is a pattern. And I'm looking into adding Juneteenth on this pattern as well. But I mean, Juneteenth's only in its third year where we're tracking it as an actual national holiday. So I need a few more years before I can call it a pattern. Okay? Once is not a pattern. Twice is not a pattern. 3 times is not a pattern. Okay, let's get to 5 years and let's take a look and see if something's happening around Juneteenth, over the last 5 years. Then we can see if there's a pattern there or not. All right. But I don't want to talk about the stock markets any longer. I don't want to talk about trading. I don't want to talk about trading as a pattern any longer. I want to talk about something else today. I want to talk about investing because I've had this come up a couple of times now where it's worth me repeating. Trading isn't investing and investing isn't trading. There's been questions along this line from folks that follow me. And so I thought I'd bring it up yes, I have trades. Trades end all the time. And I have investments. And investments I tend to stick with. Now, what's the difference between a trade and investment? Well, the IRS tells us that an investment is something that we hang on to for longer than a year. So I guess you could go down that line and say investments and trades. But if you talk to long-term investors, they hold stuff for a long time, maybe even life. Okay. So let me back up. And I want to talk about investments and trades because I'm going somewhere with this story because I want to talk about my past a little bit. And then I want to talk about what happened to me, 2 weeks ago? At a rooftop pool, talking to an executive, and it made me flash backwards. Okay. So 1984 was the year. I was just out of high school a year earlier, trying to figure out what it is I was going to do. I think I was painting houses at the time. I was going to college at the time. I was working for Pizza Hut at the time. And, I always had this idea. I always had this idea of success. Let me get the microphone closer to my face because I might have lost you there. If I did, I apologize. So where I'm going is that I always had this idea, and maybe it was the competitiveness in me. I ran cross country in school. That could have been one of the first things that helped me out. Is it wasn't about the sprint; it was about it was a long distance race, and I looked at careers, and I looked at in my 20s, in my late teens, and in my early 20s. I didn't do a lot of things right, but I had the foresight to have an idea of what I wanted to do. I didn't know exactly what I wanted to do. I just knew I wanted to either run my own business or manage something. And that's what I did. Okay. It's funny because when I went to work for Home Depot, I started part-time, then I went full-time. I didn't have any reason to leave. I actually loved working there. And I think the reason why I love working there is that when I started, there was less than 10 stores in the entire company. That's when I started, early 80s. They had started with 4 stores, then they added a few more, and they had this crazy idea that if people walked into a warehouse, and they felt that if people walked into a warehouse, they felt like they were getting a better price than going to more of a retail environment. They kind of made the appearance that you were beating the middleman. You were going to the middleman. That was the first view I had. The second thing is they had a lot of stuff, which I later found out that they didn't have a lot of stuff. What they did was they made us, when we put stuff on the shelves, they said, keep the boxes. Keep the boxes? Why? They said, we want the boxes up on top of the shelf so it looks like we got more than we actually do. They didn't have the money back then to buy all the inventory. So they buy just enough inventory at eye level, and everything above was empty cardboard boxes. All right? This was a time when we used pricing guns. I remember pricing guns. I remember my hands were sore from pricing plumbing fittings and pricing electrical fittings, ka-chunk, 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 and they had the 6-digit number. This was a SKU. It was called a stock keeping unit. It was before UPC, or before they used UPCs. And so we had to put a price and the number, the actual number, the inventory number, the product number on each piece of stuff. We punched an old time clock. I mean, it was, you put the thing in and it made a Chad on your time. And eventually it put the actual, instead of a Chad, it stamped it. It time stamped when you came in, time stamped when you came out. And then eventually people had to time stamp their breaks on the back of the card because some people were taking too many breaks. Oh God, I remember all this stuff. I remember the CEO and the president of the company used to come in on a regular basis. And they would do these, they call them Pack Out Fridays, where they'd come in, they'd bring pizza, they'd bring beer, pizza and beer. The store would close up on Friday, and they would do these big pack outs where stock would come in from the back, and they pay overtime, and free pizza and beer. You work all night, and then the only people that they wouldn't allow to work at night were the ones that had to be there the next morning to open the doors for the weekend traffic. How much fun was that? You had the president of the company coming in, bringing in pizza. And then eventually, they got bigger and it ended up being the vice president, and then been the regional manager, et cetera. But I mean, they made it fun to be there. They actually, at least in the beginning, I don't know about now because, I don't work there now, but they cared about the employees. They actually cared what the employees had to say. I mean, everybody in the company had a potential to move up at the time because it was a small company. They would talk about, I remember they'd have these meetings where they'd come in and they would talk about the ability for everybody in that place. Even if you were shagging carts, if you were outside bringing carts in, they talked about the fact that everybody in there, if they had any kind of desire, that they would all become millionaires together and build generational wealth. Now, I know some of you have heard this story more times than not from where you're working, etc. But I'm just telling you what happened to me. Now, I was a stock boy at the time, and then I ended up in the plumbing department, and then I ended up driving a forklift, and then I ended up becoming a department head, and then I ended up becoming an assistant store manager with keys. This is all in my 20s, early 20s. Getting bonuses, getting stock options. Had no idea what stock options were at the time. Then I went to the IT department and I started understanding a little bit about finance, about business, and creating systems. I helped these guys create systems for inventory, all right, where we could track the inventory so we knew it was going out the doors faster than others, and create a system where you would be able to order stuff based on what was being sold on a weekly basis, so you wouldn't run out of stock. And then we started figuring out that there were certain times of the day and certain days of the week where we constantly had more people coming in. We had the lunch rush. We had that die down, that period where not as many people came in after lunch. And then all of a sudden, after 5 o'clock, by the time 6 o'clock rolled around, then you were seeing people coming in until you closed up for the night. Well, we created a labor management system that told us how many people we needed on the floor at certain times to help customers, to put up stock, to do all these things that needed to be done. This was back in the 80s. A lot changed since then. I mean, time clocks are now computers now. They're linked with store traffic. They can tell you how much, how many people you need in the store at a certain time. Stock keeping units now. I mean, they have stuff that tells you as the registers as product goes out, tells you in advance what needs to be ordered. In fact, a lot of stuff is automatically ordered now. You don't even need somebody to go out and run accounts, although you do every once in a while. I mean, that's just kind of scratching the surface of what's happened between then and now. And that's not what I'm telling you, why I'm telling you this story. What I believe pushed this company to be one of the greatest of all time, and I'm talking about not the company itself, but the stock price too, is that they did a couple things right. Their belief was that the customer was always right. Their belief was that their store employees knew more than the executives did. They had this upside down pyramid approach to business. And this is something that I've always thought of, and that I've always said to myself, this is something that I need to take with me for the rest of my life. The upside down pyramid. We always think about the food pyramid and what's on top, and then what you should eat little of, and then as you go down, what you should eat more of. And if you look at most businesses, they have a pyramid too. The president's on top. Then you got the vice president, and you got the senior VPs and the corporate executives, and they move down to middle management, and all the way down at the bottom of the pyramid, where it's the widest, is all the folks that actually run the business, that actually make the business the day-to-day money. And what Home Depot did, and then what? Hats off to them. They did an upside down pyramid approach. They said the people that were talking to customers were the most valuable. And the farther you moved up the ladder, the less valuable you became to the actual end user. So now I'm going to fast forward to a moment. How did I end up on Wall Street because of this? I mean, I was happy there. I was making money. I was making bonuses. And eventually I got out of the retail side and I got into the corporate side. So guess what? I had weekends off. I had accomplished what I wanted to do, which was get myself to a Monday through Friday weekend off job. How did I end up on Wall Street? Well, it was partially their fault. It was partially my fault. Their fault was transferring me to New Jersey, because I'm driving down the turnpike one day and I look over, I see the Twin Towers, and I'm thinking to myself, and I knew about stock, and I knew about options at the time. I knew enough to be dangerous. And I also realized that I didn't need to stick with this company and wait a year before get them to give me stock options. I could actually buy them and sell them. And that's a whole different story. But I saw the Twin Towers. All right. I saw the Twin Towers back in 1990. I think I was 25 years old. And I decided that's where I wanted to be. And it's funny, I didn't get there for a couple of years afterwards. But I mean, I often wonder, and people said this to me too, what if you didn't go to Wall Street? What if you just stayed with Home Depot? You wouldn't be the success you are today. And I thought about that. And I wondered, what would have happened. And I'll tell you, I got a good idea of where I maybe would have been if I stayed. A couple of years ago, I ended up going to Mercedes-Benz Stadium to see the Falcons play. All right. And part of that was I was actually at one of the owner suites. Okay. This was and let me back up and tell you how I got there. I actually won a charity auction to go to the owner suite. And this was, not long after Mercedes-Benz Stadium opened. Really, really good looking stadium. If any of you are sports fans, you look at this stadium and I mean, wow, is what you're thinking. So let me tell you why I really kind of wanted to win this charity auction, because Mercedes-Benz Stadium and the Atlanta Falcons. All right, Atlanta Falcons are owned by a billionaire. His name's Arthur Blank. Any of you know anything about Arthur Blank? He was also the founder of Home Depot. Yeah, he was one of those guys that came in with pizza back in the 80s and did these pack out parties, him and Bernie Marcus. And so, you know, I ended up there. I ended up on the 50-yard line taking pictures with Arthur Blank. So here I am, and I'm asking him, I'm like, wow, this is incredible what you've done. And to think about this all started, you know, with you deciding that you were going to quit the hardware store you were working at and you were going to build something big. And he's like, yeah. And so anyway, we talked a little bit, talking about the good old days. You know, he's asking what I was doing. I hadn't seen the guy in 20 years. But that wasn't what I found surprising. Now, what I found surprising was this. I was on the field, so I had a field pass. This was before the game started. You'll go walk around the field, and it was cool. The Falcons players were coming up. Some of them were saying hello, high five, and you know, as they were doing their calisthenics, getting warmed up for the game. And you know, I saw Arthur Blank talking to a small crowd of people, and some of them looked familiar to me. I didn't remember names, but some of them looked familiar to me. Turns out this crowd of people he was talking to were all current or ex Home Depot employees that were with him back in the 80s, stayed with him, grew the company. Many were executives, became executives, store managers, etc. And many became multimillionaires because they all took a risk with a company. And do I believe I would have been one of those in the crowd? I believe so. Because, you know, I think success breeds success. And I think that if you're competitive and you want to do something, if you want to do more than just the average person, you will find a way to get there, no matter what industry you're in. Now, here's the other thing. I want to share this with you. If buying 100 shares, just 100 shares of Home Depot back in the IPO. Now, Home Depot IPO'd, what was it, in like $20 a share? And you're talking about a $2,000 investment in the early 80s. So what ends up happening? 1982. That has 3 stock splits in 1982. 1983 has a stock split. Then the next one comes in 87. Right before the crash, 87. The stock split, and then in 87, it split again. Well, oh no, the price split in half, but the stock didn't split. All right, then you go to 1989, another stock split. 90, stock split. 91, stock split. 92, stock split. 93, stock split. Then 97, there's a stock split. 1998, stock split. 1999, stock split. Hasn't been a stock split since. How much are your 100 shares worth now? Well, by the way, your 100 shares with all those stock splits would have become roughly 30,000 shares. Now, you take a look at Home Depot. All right. Take a look at the price of Home Depot. You know what? I know what it was at one time, but I'm going to see I'm going to grab a price right now. All right. I'm going to grab the price as of right now as we're on the podcast. Home Depot. Wow. 30. Okay, here. Let me take this $1,200 calculator of mine. So your $2,000 investment, your 100 shares are now 30,000 shares. 30,000 shares times $350 a share. You got over $10 million in stock. Isn't that crazy? And people think Bitcoin, you know, oh, if I'd have only gotten Bitcoin. And Bitcoin, to me, was a much harder leap than buying into a home improvement store, something that was real, that you could see, that you could touch. Isn't that crazy? Isn't that crazy? $2,000 becomes over $10 million today. Hey, Tom, why didn't you hang on to your stock? Oh, you know, part of it most of it I used to bankroll my trading, which is where I am today. Okay. But I mean, we're talking about a company that is that its percent return on IPO better than Amazon, better than Apple, better than Microsoft, better than every other company I can find out there except for one, which was United Healthcare. All right. But I want to mention this too. Home Depot didn't go straight up. Okay. There was a time when they bought a competitor. When they bought a competitor, I believe it was in the mid 80s. They bought out a competitor, and I'm trying to remember the competitor's name. It was a place in Texas. They bought a bunch of stores in Texas. And it wasn't a traditional company. It wasn't like Kmart's. Kmart had a group of stores called Build All, I think, something Build All. I don't know. It wasn't Lowe's. Obviously, Lowe's is their own company. It was something Water. I don't remember the name. I can't remember it right off the top of my head. But anyway, that company, them leveraging and buying that, got them close to bankruptcy. But they made it through. Investors stuck it out. And then, of course, here we are today. Where am I going with all this? Two things. Actually, three things. Number one, I think successful people with the right mindset will always land on their feet no matter what industry you put them in. Number two, if you are investing instead of trading, then think of the upside down pyramid when it comes to companies. The most successful companies out there long term, they do two things right. A, they listen to their customers, and B, they listen to their employees. And if you do that, it's going to be really hard to fail. You got to be an idiot when it comes to business to fail. And you have people in your company that are bean counters that can make sure that you don't fail if you truly have something that people want. All right. Now let me fast forward to today because this is kind of number three, and that is the company that I most recently invested in because it has a lot of what I saw back in the days of Home Depot. Now, remember the last podcast I was talking about my staycation that turned into a meeting at a rooftop pool with an executive from a publicly traded travel company. All right. Well, here's what happened. So a couple weeks ago, my wife and I decided we needed a little R&R. We needed to get out, away from the family, away from the house. So we took a little trip south and we went to a place called the Sunseeker. Now, the Sunseeker is a newly developed resort in Port Charlotte, of all places. Now, when you think, I know some of you don't live in Florida. You know, when you think of Florida, if you don't live in Florida, when you think of Florida, you think of Disney World. You think of Miami. You think of South Beach. You think of the Keys. I'm pretty sure you don't think of Port Charlotte because I never did. Anyway, my brother-in-law was telling me, you got to go check this place out. It's owned by this company called Allegiant Air, or AKA Allegiant Travel. I think Allegiant Travel is their name now. Anyway, if you know Allegiant Air, it's a low-cost budget airline that decided they want to be a travel company. I actually think they got something here. They got something here. So what did they do? They put $700 million into this property, and it shows. I can tell you right now, there are people in Sarasota that have gone to this place. And Sarasota is a nice town. And you just, live in Sarasota, you don't think of going to Port Charlotte for a staycation. But more and more people are catching on to this place. And it needs to be, because I'll tell you why in a moment. Great food, great service, great hotel, and they even got large suites. They got 1, 2, and 3 bedroom suites as a separate part of this resort that everything overlooks the harbor. Well, not everything, but they do have harbor views, which it feels like you're on a cruise ship when you look out your floor to ceiling windows. I mean, that's paradise, right? Well, yes and no. Here's the thing. We got there, when we opened the door to our suite, we were like, wow, this is bigger than a condo. It's bigger than most people's condos. I think their suites go from 1,500 to 2,500 square feet. I mean, that's big. And, what were these suites costing? You go at the right time. I mean, we were paying, I think, $400 a night for a 1,500 square foot suite with washer and dryer in it, Wolf appliances. I mean, I was shocked. I was really shocked. Um, anyway, it to say it wowed us was an understatement in the beginning. But here's where things go a little south for them. Now they've only been open a few months, and the only things you can really do at this resort are eat, drink, and swim. If you golf, they do have a golf course that they'll cart you to. All right, off premises. But the thing is that they're missing something. What they're missing is a theme. And I see all this water off the harbor, and not a single dock, not a single boat slip. Okay, this is what I'm thinking. Now here's where it gets good. I got this friend. He's kind of an extrovert. He ended up being there the same weekend with us. He's the kind of guy where we all have this kind of friend. His mouth is open more than it's closed, right? He talks twice as much as he listens. We all have one of those guys in our group. We ended up at the rooftop pool here at the Sunseeker. I see him there with a crowd of others because that's him. He can go to a place by himself, and within 30 minutes, he becomes the center of attention. So he sees me, he's waving to me, Tom, come here. I got to introduce you to these people. I'm like, oh my God, what is he doing? Anyway, one of the people he introduces me to was the senior VP of travel for Allegiant. Okay, so so you got the president, that's Maury. You've got, senior VPs, and he's one of the senior VPs. He's like, if you're at the food pyramid of companies, he would be right below the top. Nice guy. We had I talked to him for about 5 minutes, and then I went on my way. He went on his way. He was with his wife. He was with a couple of friends and their wives. I find out afterwards that the people he was with were casino executives from Vegas, because all these people live in Vegas because Allegiant Travel is headquartered in, guess where? Vegas. So I start to Bud Fox this thing a bit. Roll the dice. Let's see where we land on this resort. And I'm like, casino guys in Florida. Now, the only casinos that are in Florida have Indian names attached to them. The Seminole Hard Rock is an example. So I'm, again, Bud Foxing this, and I'm like, oh my God, these guys are going to go for a gaming license at this resort. Now, I don't know anything more than this, but I find out that the entire resort is hardwired for games. They've already hardwired the place. Do a bit of work. And I find out also that they're going to put in a 100 slip boat marina. Yeah, they're going to do something with all that water. So look at the stock price. ALGT. When you look at the stock price, it's down 80% in 3 years. Stock price was at $250 a share by the end of 2021. Now, everything was smoking hot in 2021 because we had so much money getting flushed out and interest rates were still low. But they've dropped 80%. They've gone from $250 a share down to $50 a share, and it's been bouncing around from the high 40s to the mid 50s for the last couple months. So I think, and talking to the executive who could not comment on the casino thing, but he did say that they went a little over budget. They didn't open on time. They were supposed to have a big name celebrity come down and kick this thing off, but we had a hurricane when they wanted to open, or a tropical storm. Something was going on, so they couldn't open before season. Now, seasons in Florida are between October and April, or October, March is kind of that season, November to April. That's Florida's season. They missed that. So they actually didn't open until what was it, December, January. By the time you have to soft open. They were still soft opening. They did a soft open and they were kind of open for business. We were there. But let me tell you, folks, 30 to 40% occupancy, well, that's going to cause your stock price to go down. But here's the things I like about Allegiant. I like the fact that when I'm talking to everybody there, first of all, the service was phenomenal. And the people were genuinely happy to be there. Not only happy to be there, but we had a couple of them telling us how much they liked the management of the company because they listened to the employees. And another thing, as I was talking to the guy, the senior VP at Allegiant, we were talking about themes. We were talking about something to do with the suites. And the guy was like, wow, that's a good idea. Let me run that up the flagpole. Listen to your customer. Listen to your employees. All right. All of a sudden, I'm seeing a similar pattern. I know, some of you are listening to the podcast. You're like, there's nothing about patterns in this Patterns and Profits podcast, Tom. There is. Because, again, a pattern can be anything. And all of a sudden, now I'm looking at an investment pattern. And I'm seeing the upside down pyramid happening. Now, is this a guarantee? No, absolutely not. But I'm seeing a lot of the same things. And I'm seeing a company that could either go head to head with all the other airline companies or do something a little bit different. And what they're doing is they're trying to take their airline and turn it into a travel company. And what I do see is I could see where they will fly people. They will do an entire package, flight, resort, entertainment, all in one package. And I can see how they can package that up. And if they get casinos, then they're in business. So I'm not betting the farm on this, but I'm dipping my financial toe in the water. Okay? All right. Full transparency. I am long Allegiant stock. I have a position in Allegiant stock. All right. That's my white paper for you on Allegiant stock. Again, I'm not recommending anything, but, take a look and see what you see on this company, what you might see, where you might see it going. All right. So that is it, folks. Hey, I turned 59 years young. I love how these old people say, I'm 59 years young. I don't feel young. I'm fighting it, but I can feel it. I turn 59 next week, folks. I'm going to take a little holiday. So I'm probably not going to have a podcast next week. All right. But I'll be back. I will be back after the 4th of July. And we're going to take a look at earnings as we go into the July earnings. Because by then, we'll be able to start looking at earnings. We'll start to see if we can get some projections on these. Hey, you know what? By the way, we came out of, what was it, last week? Really sweet, really smelling sweet. We were actually looking at the tech companies. And what was the tech company we were looking at? Adobe. We were looking at Adobe, and we were patterning Adobe based on how well it had done through its earnings, but also how well the tech companies were doing through their Q2 earnings. And that one really knocked it out of the park. I think we actually had to get out of that one early because they hit a profit target pretty quick. But that we were discussing with the folks that follow us outside of the podcast. So anyway, I want to tell you that because we're going to be looking at earnings again after the 4th of July. So hopefully you can come with me then, and we'll talk about the top stocks, the top bulls and the top bears that I'll be following into and out of earnings coming up for our next quarterly earnings. All right, so there we go. Hope you guys have a great week. Thanks again for joining me, and I'll see you again real soon. Bye, everyone.